Don't you love it when you meet with an investor and you seemingly have a really good conversation, you've built rapport, you've shared all the details about your investment, and then they come back to you with, I need to think about it. Or you just simply never hear from them again. Well, here's what's really happening. By the way, before I get into it, my name is Vitaly, and I am from the company called Raise Ready Systems, where we help our clients raise capital on the internet through digital investor acquisition. And before we dive into any of this, I just want to make it crystal clear that by no means should any of the comments that I make in this video be misconstrued as income claims. This is just simply everything we're sharing with you based on us running dozens of investor acquisition campaigns for our clients. So with that out of the way, let's get into it. You've got an advertising campaign or you're getting investors into your door, somebody who you don't really know. This is typically somebody who's outside of your friends and family round, and you're essentially building a relationship from scratch. And this is especially the case when you are using the internet to get out in front of investors with your offering. So let's just call it exactly what it is. You're going out on the internet and you're asking complete strangers who are highly skeptical to write you 6- and 7-figure checks. And then you wonder, well, why isn't this working? But aside from establishing a really great portfolio fit with your prospects, your biggest hurdle to overcome is trust. So in this video, I'm going to show you exactly what a due diligence pack is, how to use it, what's included, and the 3 biggest mistakes to avoid so you can turn your I need to think about it into send me your docs. By the way, if you're finding this video helpful, it would help out tremendously if you hit like and subscribe for more videos like this. So it's important to understand exactly where this fits in. For our clients, we've designed a 2-call funnel. Every so often, an investor will come in and invest within days, no second call needed. But more often than not, we want to give the option of a second call. And so a due diligence pack fits in between the call 1, where you run discovery and establish great portfolio fit, and between call 2, where you address any last minute questions. And the due diligence pack is sent between call 1 and call 2. And what I'm about to show you is a screenshot of the exact email he sends to his prospects, and he's raising around $1 million a month. Let's take a look. So this is an email that he sends. And first things first, what I love about this email is that he offers multiple ways to consume the information. First and foremost, he's got his videos. These are very short videos. These are videos that we help our clients produce as part of our process. And you've got a company summary, and then you've also got the explainer, which basically goes over the deck. In addition, he's got a couple of links, and this is the section that I think is the most important, because by the time the prospect has spoken with you, they would have already consumed this information right here. So let's take a look at the docs here that are attached. He's got his investment brochure, which essentially is the slide deck. He's got his quarterly report. That is the latest report from the quarter prior to the day that this is sent. They've got a third-party financial audit. I mean, how awesome is that to build credibility, to say that, hey, we've got this other company who is overlooking our investment, and this is their report based on all the financial information that we have provided. That's a great credibility builder. Now, something like this, which is a link to their SEC filing, is extremely important too, and it's such a basic thing. Every one of you have it, but nobody includes it. It makes you stand out over everybody else who just doesn't think to include this information that's just so obvious and yet builds so much credibility. Now, you probably have a website that you've probably invested a lot of time and money into building out. Why not include it here as well? There's a lot of information there, and it just shows, hey, this is an established group, that we're not a fly-by-night operation. Next, we have our Better Business Bureau link. If you have that, include it. I love the fact that I don't even have to click to know that they have 16-year history and an A+ rating. Don't have to click it, it's already included. So if you have something like that, throw that in. Now, you could include your Trustpilot links or your Invest Clearly link, anything like that that shows testimonials, or maybe you have a collection of testimonials on your website as well. This is a great place to include that. I don't know about you guys, but when I go to a website, one of the first links I click is the About Us page. And what I'm looking to find there is just a picture or something of who I'm going to be doing business with. In the age of AI, it's so easy to create content, and without having a picture there, it very well could be misconstrued as just another AI-generated page And at the end of the day, your investors are doing business with a human being, and so that's who you want to highlight. And it's especially critical in the age of AI that we're in right now. Establish yourself as a real person with a real background and showcase your team. For this particular sponsor, they have some licenses in some states based on the asset class that they're in. So if you have any of those, why not include them as well? And this is one of those things an investor will never tell you, but you bet they're thinking it. And this is, hey, I found you guys online. How do I know this is not a scam? Again, the barrier to entry to online advertising is very, very low. So provided that there is a really good portfolio fit, that this is, let's say you have an income product and their portfolio, and that's exactly what they're looking for. The next thing they're going to be looking for is, how easy is it for me to communicate with the sponsor? Are they responsive? Are they giving me all the information that they need? And so and there is a lot of options out there for investors. So don't make them think, don't make them click extra buttons, and present all your information up front without them having to ask for it. And so to prove that this is not a scam, beyond the shadow of a doubt, because you'd be surprised how many prospects come to us, and when I do a Google search on them, there is some kind of an SEC litigation top of their Google search when I search their name. Do you think that that builds investor trust? So do this work for them and just let them know beyond shadow of a doubt that you are legit. And so what our client decided to do, based on our recommendation, is to include their personal credit report and background check upon request. Now, arguably, this is something that you would just include to say, hey, by the way, I just threw these in. But the fact that you're willing to present this information builds a lot of trust. Now, this section right here is a fantastic summary of your investment offering. Here's something that I was thinking about the other day. When looking at all the different clients that we're serving, there was a clear pattern that I could establish. I could put some investments into capital preservation category. I could categorize some investments into income producing, and then I could categorize some investments into the growth, kind of more riskier, higher return category. And what this does right here is allows the investor to really quickly understand what category is this in, how is it going to impact my portfolio, and how this whole investment even works. Now, what I love what this client did is that they also included, in 16 years, there are no investor losses. If you have something like that, the further back you can go, the better. They're in the loan space, how many borrowers they've got, how many investors they have, letting them know that, hey, you're not the first person they're doing business with. They've been doing this for quite a while. And the fact that they're available on all these custodial platforms right here, meaning that there's other more serious institutions that have vetted them far beyond what you can vet as an individual investor. So giving the impression that if they can trust you, so can you. Now, lastly, there is just a summary on their specific investment feature, but this is something that you might not even include depending, or something that you would substitute with your own. Now, there's 3 common mistakes that managers make when they're putting together their due diligence pack and how they distribute it. And the first mistake is sending the due diligence pack too early. And too early to us means before you've met the investor, before you've done discovery. There's some amount of information that they're going to consume prior to first meeting with you, but you do not want to overwhelm the investor without confirming that there is a really great portfolio investment fit. Now, once you've done that, you have to now build the trust, and that's where the due diligence pack comes in. So don't send it too early. It's going to be a lot of information. There's already things that they're going to be consuming prior to the call. So leave those things there and save this for after the initial call. Now, one thing that I see far too often is that managers send this content. It looks incredibly difficult to consume. So organization is everything. Don't put the burden on organization on the investor. Do that work for them. Make it nice and easy and simple for you to just copy and paste into an email so you can send it out. What you do not want to do, and I've seen this more than once, so a manager includes a lot of PDFs with tiny numbers and big spreadsheets, and the investor doesn't even know what you're looking at. So don't show them the work that it took you to arrive to where you're at. Just show them where you arrived, because a confused mind always says no. It's far easier to say no because there's an infinite amount of opportunities where they can place their capital. So the way you present and organize this information is everything. Keep it simple, keep it concise, and keep it relevant to the conversation that you just had with them prior on that first call. And conversely, the last mistake you can make is have a lack of transparency where it's not enough information. So make sure you find ways to demonstrate high value and include all the things that I just went over, or as close to that as you can in this presentation. And just in case I didn't cover this earlier in the video, what you want to do is you want to send this due diligence pack immediately in an email after your initial discovery call with the investor. And you're welcome to tailor it based on the conversation that you just had, so it's extremely relevant to their needs and their objections. From our perspective, the due diligence pack is a critical tool to turn skeptical strangers off of the internet into check writers writing checks in the 100 to 1 million plus range. If you're an investment manager looking to streamline investor acquisition using the internet, using digital marketing, click below to schedule a call with us. Go to raisereadysystems.com/call to get on our calendar. Now, we don't just do accredited investor acquisition. We can also help you find the perfect lender, and then we have connections on the institutional side as well. So drop us a line and let us know how we can help. If you found this content valuable, subscribe, like, and leave us a comment below for what other videos you'd like to see. And then don't forget to check out these other videos right here. Thanks for joining. We'll see you on the next one.